Welcome back, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 475, Nasdaq's up 380, S&Ps are up 80. Let's go over to our man, Mr. Teddy Cakes, as we do each and every Wednesday at 40 past the hour. You can reach Teddy, folks, every trading day at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Cakes, what's going on?
Oh my gosh! If today's not a day that your listeners know that the interest rates are definitely a pricing component of the currencies, I don't know what would prove it to them, because it sure is to me.
What a move, right? That was just extraordinary, man. 5 points inside the 30. That's like
absolutely, absolutely. Now you know what's funny is there's times where the currencies, the currencies didn't have that big of a move. I mean, on a daily basis, it looks kind of big, but that's because the ranges have been pretty tight for the last week and a half.
Okay.
You know? And if you look at the range in the euro today, it had basically a dollar. It was 170 pip move. So it's not quite like $1.75 of a move, on a basis level. That's not that big of a deal, especially with news or what have you. Now, the fact that the bonds, though, did what they did, that's a totally different story. And that's what really drove the currency moves. Because I think what happened yesterday is with the way the bonds moved, that set off all the, it set off margins, and it also set off the algos. Okay, so that's why we have the extremes that were hit. I mean, think about this. Anyone that trades the currencies or the bond futures markets, or like for the 30-year or the 10-year, if they don't trade with stops, they got blown out of their positions and probably got margin calls over the night. At some period, either whether it was early on or later with the move, somehow today with the volatility.
That's right, because what Teddy's saying, folks, so for the 30-year, you normally put up about $5,000. It was a $5,000 move. So if you're on the right side, great, you're great. But guess what? It's a two-way market, so yeah.
And you would have been stopped out before you even would have been able to see half that move anyhow. The machines would have kicked you out.
Right.
So you would have had margin calls going on from the computers going on in the currency market and the interest rate market simultaneously. Also, at the same time, the algos had to be kicking up huge. Like if you look at the volume in the currency, all the currencies, all the interest rate markets, there was a huge volume spike overnight between yesterday's trading and today's trading.
Okay.
It's not because people are making a bet getting long or short. It's because of the volatility got so high. And you have to think about the bond market especially. If you look at it, the 30-year stretched super high. The 10-year did as well, but nothing like what the 30-year did.
Right.
So the spreads between those were so extreme, and you have the euro dollars now where they're still stuck at their highs. So, I mean, you can't buy it because it's not going anywhere, and if you sell it, it's not going anywhere either. So the only leg on those spreads, especially internationally, is the 30-year and the 10-year. So I think that that's really what happened overnight. Was they just really they got stretched so far, because they're pushing it. We don't have an outcome for the election. We know we're not going to have one right away. But think about this. This was not what's going on in the currencies today is not currency driven. It's interest rate driven. And I think now you have to watch the next 24 to 48 hours because there's going to be a balancing. So all your small traders, all your weak longs and shorts, it doesn't matter whether you were long or short yesterday in 30-year bond market. If you're a weak long or short, you got knocked out. Somehow you did within the past 24 hours. You can't tell me that you didn't unless you somehow were on the right side and were like, okay, I'm going to get out of this move. But that's always far and few between,
Because
so
what Teddy's talking about, folks, what had happened is that, basically, from 9 to 10, you had a vicious retracement. And then, from basically 2 in the morning to 3:30 in the morning, you had a vicious retracement. Meaning, if you're going to take your money, even if you're on the right side, meaning, higher price, lower yield, normally you bring a stop up with it. You're not going to leave that thing just laying out there. Do you know what I mean?
Right.
Because the amount of money you already took in is huge. Yeah.
Sure.
Hey, so let me ask you something. I've never done this. I like trading the 10s a lot. So what you're saying, people trade the 10s and 30s as a spread, right? Is that what they're doing too?
Mm-hmm. Absolutely.
Yeah. Okay. Cool. I got it. Right. Okay.
Absolutely.
And that's where the offens are, right? Because it wasn't the same type of move, right? I got it. Okay.
Right. Absolutely. So now you got to figure there's balancing on all those things. Now, as far as directionally, where are we going? Well, one, we need an outcome for the election. We pretty much know that Biden is priced in, and that's where everyone's looking forward to. It's just a matter of closure, So the volatility we had today, I don't think you're going to see that for the next couple days. As far as trending and strength, Like yesterday, if it was no election, I had all kinds of buy signals. I had a buy signal again, or a sell signal for the dollar versus the euro, the pound, and the Swiss. Okay. So because like the book that I wrote, High Probable Japanese Candlestick Patterns, this would have been a day yesterday on the close, you'd be getting into these positions. However, one of my rules is never in front of a major event. If you get a signal, do you do it? And this is why you don't do it. Because what happened today.
Right.
The buy, you would have been getting long the euro US dollar as of the close yesterday, which would have been great going into the evening. And then what happened? It came out and it took out the low from yesterday and the low from the day before. It spiked. We made on a daily basis we made a higher move high within the past 24 hours and made another lower move low on a daily basis. And now we're basically unchanged on the day. That's extreme volatility.
Exactly.
You know what I mean? So, what do you figure? So is my buy signals, that's why, am I now bullish on the euro US dollar because I had a signal yesterday? Well, no, because if I would have taken the signal against the rule, I would have been stopped out as a loser.
Yeah.
And you know what I'm saying? And now because of that volatility, the levels were stopped out, so the signal is no longer good. You know what I mean? So that tells me that, especially with what's going on in Europe between the UK, Germany, and France. You have besides COVID lockdowns, now you have high terror alerts. So you're not going to see strength in those currencies right now, at least not very much. You know what I mean? Dollar, until we have a result from the election, it's just going to be a sideways trade.
It's cool, man. Because what you're really saying is, let the markets calm down for a couple of days, and then you'll see the trend going back and forth, whatever that is going to be. Yeah, I know,
right.
Which is really cool, man.
Don't chop yourself up right now. Just don't.
Yeah.
I'm flat as you can be. It's like, you remember from the floor trading days, like every floor trader goes home flat.
Yep.
At least you try to.
Right.
So, but even a position trader going on in markets like this, you just stay out. And this is like, I don't feel like I'm a genius because I'm flat. After what happened, but I know that after this conversation today, I'm going to play golf. It's going to be 70 degrees in Chicago.
We both know, and folks, if you've traded a lot out here, you're going to know it's really a great feeling being flat that you can go have a life somewhere else for the 6.5 hours, in Teddy's case, probably 20 hours that market's basically open. No, it is, isn't it?
Right.
I dig it. No, listen, I'm in the same case right now. Do you know what I mean? I'm saying to myself, okay, and it takes a lot to turn around and say, okay, let this baby settle out. Because what I love is that the ranges are much bigger now. So once this settles out a bit, man, there's always another trade, folks, and these ranges are big now.
Right.
Man. Yeah.
You know what? Exactly. There's always another trade, know, and you know what I mean? Like, you know what I did? I watched The Godfather and fell asleep last night. I slept like a baby.
I love it, man. That is a series, man. Yeah, totally. That's the way to go. Listen, man, that's what makes it happen, man. You got to love it.
Right.
Well, listen, man, it's a pleasure. You go get a hole-in-one, man. That'd be a beautiful thing. That's a good way to kick off today. We love the education. We look forward to speaking next Wednesday, Teddy.
Thanks, guys. You have a good one, Tom.
Thank you.
Thanks, Teddy. You too.
Stay right there, folks. Tommy and I come right back. Dow's up 552, Nasdaq's up 404, S&P's are up 86. We'll come right back.